The other sort of big event that's capturing attention and headlines is what the Fed is likely to do. Will it act in December? Will it not act in December? And again, that's something that you've sort of said, you know, grow up and get on with life and get on with business. But what are you expecting now? Do you expect a Fed liftoff in December?
So I'm going to let the Fed decide that. I guess my main point has been that no one I see around the world, and anywhere around the world, neither consumers, small businesses, or large companies, say that 25 basis points is going to affect me. And by the way, if you did say it was going to affect you, I'd say you've been irresponsible with your financial affairs. So everyone's kind of prepared. If the Fed does it, you know, presumably they're going to do it because America's doing better, it's stronger, and think of it as normalization. It's not what we would call traditional tightening. So I'm not afraid of it. I think that when they do it, it'll be fine. And, you know, I think it's fine if they do it in December. If they decide to wait for whatever reason in January or February, that's fine, too.
But what is the likely impact as far as emerging markets like India is concerned? And this is, again, the big worry that are we going to see outflows from emerging markets like India? Do you believe that that's an exaggerated concern or an exaggerated threat?
Again, markets are way ahead of, you know, markets already have that expectation. So, you know,
But every time that possibility comes up, we see the markets sell up.
It's when the Fed changes direction, you've seen a major change in capital flows around the world. So it's when they said we're doing QE and now we're tapering, and people are a little surprised, and you saw. And by what happened, emerging markets and foreign currencies fell 10%, and they recovered, you know, 80% of that within the next, I forgot, maybe 6 weeks or something like that. The world is prepared for this. In fact, I gather in the IMF meeting down in Peru, where I wasn't there, that a lot of the emerging market central bank governors said, please do it. It will reduce uncertainty, and we are prepared for it.
But the IMF
and by the way, I think that
the IMF itself doesn't want the Fed to move. At this point.
I disagree with them.
You disagree with them?
Yes.
So you think that once the Fed decides to hike and does hike, whether it's December or January, it will sort of put in place a certain degree of certainty as far as not just developed markets, but more significantly emerging markets are concerned?
And remember, the companies in developed markets, so it's both the countries and the companies. I think most people are aware it's coming, they're knowledgeable about it, and they're not going to be hurt by it. So my guess is it will reduce uncertainty, not increase it.
Since we're talking about emerging
markets. And remember, it's a sign that America's economy,
getting better.
Which is still the biggest economy on the planet, is getting better. That is a good thing for everybody. Not a bad thing.
That I get. But how are you also reading Mario Draghi's comments, which have come in, you know, over the last 48 hours, and then we saw the PBOC action coming in. So there's one part of the world which is probably going to move towards normalization. I won't use the word tightening. And then you have another part where the accommodative monetary policy stance continues.
Right, but, you know, again, places of the world are different. So, you know, central bankers have to do what's right for their own country, and sometimes the country needs a little bit something different than other, and currency used to make up for that. So, you know, Mario Draghi, I think, has done a great job navigating a very complex political, social, economic environment in the Eurozone, and he's simply making the statement that they will do more if they need to. And when he made that statement, we'll do whatever.
Do you believe they will need to do more? Or continue on the path that they are on?
I really don't know. But I think the statements make it less likely they'll do more.
But
because it gives more confidence to people that they can, you know, they can grow and expand, and rates will stay lower for longer. You
know, we're talking about global growth, and it has been patchy, and the IMF forecast for emerging markets doesn't look particularly good. How concerned are you about emerging market growth at this point in time?
You know, a little bit, but again, every country is different. So, you know, you're going at 7%. China's talking about 6.9%, and some think it's less. You know, I think Mexico's been doing a great job. You know, Brazil obviously has been shrinking a little bit, and I think they've had probably more stress and strain than most. And but I hate lumping them all together. You know, if you go to the United States, you can do the same thing state by state. Okay, well, sometimes the state isn't doing as well as another state for a reason. You know, commodity prices are up or they're down, and you know, commodity prices being down have hurt a bunch of emerging market countries. They've helped India. And that's the state of affairs around the world, and I think people shouldn't overreact to it or lump them all together in one thing.
What does this mean now in terms of global M&A, and specifically with in the context of India and the kind of growth that we're seeing in India, both inbound and outbound? How confident do you feel about 2016 being a big year as far as global M&A is concerned?
You know, I hate to forecast things like that. It's a little bit like the weather. You know, we serve the clients, but it looks right now it looks pretty good.
Yeah.
But in all ways, you know, if Chinese companies going overseas, you've got a lot of very successful Indian companies that have already been very active around the world. The rupee's done better than most currencies, and that you know generally helps. people, though of course there are probably plenty of opportunities here. So, but there are a lot of companies around the world that are having M&A conversations. Debt is cheap. They still want to grow. They're not getting enough natural growth from from markets just simply growing. So it's a natural outcome. And you've seen an awful lot of it, and there's an awful lot of people talking about more.
You know, I want to ask you a quick question in terms of what we're seeing change here in India, and that is small banks, payment banks, and so on and so forth, and the RBI giving out differentiated licenses. Do you believe that this is going to change traditional banking significantly? And what are you seeing happen in the U.S. as far as technology and leveraging technology is concerned? Because now, bank branches may in fact end up being liabilities as opposed to assets.
Yeah, I don't think that's true. I've heard that my whole life too.
No?
Look, bank branches used to be transactional. People came in to deposit money, get checks. So think of it as an operating center. More and more they're shifting to advice. Loan officers, small business officers, investment advice, things like that. So I do think branches will change. They're more automated, they're going to get smaller, there'll be less tellers and more advisors in effect in the branch.
So the obituary of the bank branch is premature.
I know I've been reading a lot about the payment systems here, and it's hard for me to figure out exactly what it means. But I wish I had my iPhone, but we have 20 million people already banking that. So we are a huge digital bank already, and shockingly, people use the branch and they use the mobile. They use the mobile to look at their accounts, to move money. They're going to be able to do more and more things. So I think it's a great thing to offer your clients more services and in the way they want, they're cheaper, better, faster. That is capitalism. So whether there are competitors who come in that create different models, that's always possible in the technological changes. But you know what? We're pretty good at it too. So we're prepared to compete, and we're prepared to collaborate. There may be, there are a bunch of those fintech companies that we do a lot of collaboration with. We think they're quite good. We think we can do things better together for the client.
What is it meant in terms of bringing down costs for you? And I speak about this in the context of a comment that's coming from the Reserve Bank Governor, Raghuram Rajan, who said that while banks are using technology and leveraging technology to enhance speed and become more efficient, expenses haven't really seen a significant or a dramatic reduction. What's the experience been like for you?
If you look at a long period of time, the cost of banking has come down dramatically. Clients can do more, better, faster, quicker, cheaper than they were able to do before. That's true on the corporate side. That's true on the retail side, the consumer side, et cetera. So over a long period of time, banks do more for people. So with a bank, in the old days, you may remember, you're probably too young to remember, when you had a check, the checkbook you had to put in the machine to stamp it. Now you have a debit card and a credit card. You can move money online. You can deposit money online. You can get cash anywhere from ATMs. And the cost of all that's actually gotten cheaper, not more expensive. So, but he's right to say, are there ways to make it even better? India's done a great thing, by the way. They want to bank all their population. I think between your biometrics, your transfers, I think it's great stuff. And so I wish in America we did some stuff like that. They'd be great for a lot of the people who don't have traditional banking. So I think he's right to say that. And my guess is some of your banks here who are among the more innovative will come up with ways to serve more clients.
I know we're out of time, so I'm going to put one final question to you in terms of the regulatory environment in the U.S. And you've stated quite publicly that the U.S. needs to skinny down regulations.
No, that's not what I said. First, I believe in strong regulations.
Yeah.
But I made a point at one point that we have a lot of regulators. Even the regulators agree that there are like too many. And it causes confusion for them and for us. So I meant they should skinny down the number of regulators. For example, we have the SEC and the CFTC. We have 5 or 6 people who regulate. We have 7 people who regulate mortgages. It's made it very hard to come up with new mortgage rules. So that's just a rule, a better way to do it. I've always believed in good, strong regulations. And yes, I don't agree with every one that was ever done.
But do you believe that we are likely to see the overlap in the... No?
Not in my life.
So is it going to get even harder for you to do business then?
No, we're adapting. We're putting a lot of effort into meeting rules and requirements around the world. It's not just the United States. And there are reporting requirements, there are consumer requirements, there are liquidity requirements, and capital. And those are all fine. We've got a lot of it done. So I feel really great that our team's been able to get all that done, serve the client, meet all the regulatory legal requirements you have to meet, set very high, the standards are much higher than they were before, and a lot of that's a good thing, not a bad thing, and it's global.
Final question, what are you most excited about in India?
I love I've been coming here since for JPMORGAN since 2004, and it's a dramatic change. you know, the buildings, the high-rises, the streets, the bridges. It's a wonderful thing. So you should take a little pride in what you've accomplished, because you're going to accomplish a lot more in the next 20 years.
Well, Jamie Dimon, it's been a pleasure speaking with you. Thank you very much for joining us on CNBC-TV18, and we wish you the very best of luck.
Thank you. You too.
Well, with that, it's time for us to wrap up this CNBC-TV18 special. From all of us here, goodbye. Many thanks for watching.